D part of the question. Clearly, they told us something in the last exhibit about some professional issues. There's a request from Mark York, the CFO, regarding KPI. And the news report about the incentive payment. All right, so I'm listening to you. What are your points on that? Or I give you short time to read it again if you need to read it again and put your points together. But if you already have it, you can go ahead. I'm still waiting.
Okay, so we can go ahead.
Yeah.
Okay, I would like to talk about the intimidation threats that arises as a result of Mark saying that the audit team is going to, sorry, the audit fee will be increased by 20% if if we have a favorable assurance. Now, tying the audit fee to favorable assurance would affect the independence or objectivity of the audit team. And well, for a safeguard, management should be educated that if a job will be taken, the audit would be performed in accordance with relevant ISAs on or the agreed upon procedures, and the opinion given could be favorable or not. Then another thing is that we should obtain a separate engagement letter, and the fee for that KPI assurance should be clearly agreed upon.
Okay. Okay. All right. That's good. Thank you. What else? The points are not flowing in respect of this. I'm a bit surprised because we've done a question like this before in this class. Yes, we have. Okay. Whether it's Croc's group or I can't remember which question now, but this is not the first time the examiner is repeating something similar to this.
Okay. Bribery allegation.
No. We're in KPI. We're not talking of bribery yet.
Oh, okay.
All right. Number one. If I'm in the exam hall, I will try to gauge how many points do I need to state. Perhaps 5 marks for this, 5 marks for the other one. It could be 6-4 because the examiner is not specific based on the mark allocation. Now, for any KPI assurance, you have to, first of all, think of what is the nature of the KPI. The threat you want to deal with is self-review threats. Why? Because KPIs may have financial indicators or metrics, right? Which are in the financial statements. Also, review of other information. We did audit reports in this class. And under audit report, there's a section of the audit report called other information. An auditor is expected to review every other information in the annual report, aside the financial statement, and confirm that there are no material inconsistencies. That is part of audit responsibility. So if you are reviewing that as part of an audit, and then you are now providing assurance on some of those KPIs that will form part of those other information, then it creates a self-review threat. I've told you that Just saying self-review threat does not give you the mark, but you have to tell the examiner why it is a threat. So errors may not be highlighted by the assurance team or audit team, because they will say audit team may not want to raise issues because they will say, well, our assurance team has already provided assurance on that thing, right? So that's a significant issue in this question. And then obviously the second issue is the issue of combining the fee with audit. So first you have to talk about, I don't know why, is it that we didn't see contingent fees here? They said we will pay you an extra 20% if your assurance is favorable. Is contingent fees allowed in an audit? Not allowed in an audit. The lady called it intimidation threat. That's fine. Or self-interest, perhaps. Separate engagement letter and treatment as a separate engagement. Contingent fee for Kpi Assurance is also not appropriate. So you discussed that as well. Because if you are saying we should give you assurance on the KPI, only, however, we will give you money if it's favorable or more money if it's favorable, then you should have consent. In fact, that should also lead you to other considerations as well, like management integrity. Given the proposal that they are giving to you. Now, beyond that, you should also look at competence. And why is it important that we check competence? Do we have the specialist skills required to do this kind of job? Given that this is our first client in the industry as well, we need to recognize the fact that KPI assurance, particularly for non-financial KPIs, is actually a specialized area. Availability of resources. So even if you have the skill in-house, do you have enough resources to execute the job within agreed deadlines? Your team in that area might already be overbooked, and adequate reviews that are required as well. Key question will be, can we provide the service at the end of the day? The answer is often not straightforward. It's often not straightforward, but it is best avoided. Okay? Providing an KPI assurance for audit clients is best avoided because of the self-review threat it creates. You still have a responsibility as an auditor to review those non-financial statement areas. Okay. All right. So let's move to the other one. Incentive payment. Any question? Okay. So what are your thoughts on the other one?
Shay?
Mm-hmm.
So you know how the question says to use Exhibit 5? And so I thought we're just going to restrict our answers to Exhibit 5. But I can see you've brought in the other part of the question of like how they're doing this for the first time. It's the first industry, and you're considering all of that in the planning. I I'm just not sure when to go outside the exhibit and or when to use just the exhibit they've asked us to use. And so I had limited answers or whatever to work with.
No. There's no going out of anything. It's still about the same company. Okay. So we didn't go out of anything. It's the same pail. Just that the ethical issue is arising in Exhibit 5, but you have to link it to the same pail and the story of pail that we know. We can't say, we can't be talking about, for example, specialist skill and ignore the fact that this is the first time we're auditing a company in that industry. Okay. Because it is mentioned in another.
Okay, thank you.
Am I perceiving a problem with dealing with ethical issues? This one that the class is silent on very simple questions like this. Or is this not simple?
Actually, I'll take the incentive payment. So, tail close payment and to the government official is about 15,000. Yes, so $15,000, and that was to secure like a purchase. And so the statement that they made that the payments are routine business practice in Ireland is inappropriate, and that can be deemed to be like bribery and corruption. And this also kind of casts doubt to the integrity of the management. So I think that also there may be other malpractices in PILCO because Mark is trying to cover because he was asking the auditors to investigate further the payment and so not to do any investigation as part of the audit procedure. So I think that there might be other malpractices that he's trying to cover. But saying that the amount is not significant is not a valid reason. So it may also be involved with some kind of fraud, and it may even say that that may become apparent to the auditors. So they need to approach the audit with a high level of professional skepticism and then a personal mind, and also updating his team and then documenting all of the findings. So I think that also that further independent investigation will be very necessary, and that should be performed because there are similar issues. In case there are other issues, which is immaterial to the asset. So I think this was about 0.63%. So there may be other issues, and then that will be uncovered. And I think also there will be a need to inform those charged with governance, and they also consider if there's any need to report to maybe regulatory bodies who may be third party, although they have to also bear in mind duty of confidentiality.
They have to also bear in mind what? The duty of confidentiality, yeah?
Yes, if they're reporting to third parties. Yes.
Okay. Good point, actually. Good point. What else?
So, Shay, under the incentive, I said so there is a bit about evidence gathering that says, and I said an inability to investigate the news report and not investigate the payment as part of our audit procedures, as requested by Mark, will make it difficult to form an opinion. More so, considering third-party information is more acceptable than insider information. This also indicates PLCO may have something to. No, now my note is mocked up. So that PL may have been hiding something that may be significant, and we will not be able to substantiate our findings, as we may find out that there are more similar situations out there by PLCO. So if we are not able to investigate this one, there could be other pointers that we may be missing if PL doesn't allow us to do this.
Okay. Good one as well. I just think you can link it to one of the preconditions for an audit. Yeah. You remember we have 4 preconditions for an audit, and one of them is that management acknowledge their responsibility to provide all information and explanation considered necessary for the purpose of the audit. Okay, so if they now start violating that responsibility by imposing limitation on scope of our work, then we should start reconsidering our relationship with the client. Okay, so that would be nice in terms of the evidence issue you are raising. All right, good. Any other points as I wrapped up this now? So first thing, guys, is this is a potential issue with compliance with laws and regulation. Okay, so the first thing an auditor needs to do is to gain knowledge and understanding of relevant laws and regulation that may have been violated. Okay? In doing that, you can seek legal advice. Okay? Then you will then need to perform audit procedures. Again, remember that these are bullet points. You can build on it. Gaining knowledge of laws and regulation is ISA 250, and it contains things auditor must do. We've covered ISA 250 in class. So perform audit procedures to understand the issue and whether it is generally acceptable / ethical. Okay. Any breach should be identified and 1. Evaluate the impact. For example, do we need to report to regulator? 2. Discuss with management and those charged with what? Governance. Very important. Okay. Then next, potential scope limitation, which affects a precondition for an audit. And that is management agreeing to provide all necessary evidence. Okay. So discuss this potential violation with management. This is ISA 210 on agreeing engagement terms. Okay. Then what else can you discuss? Yeah, other represent management integrity. So you've talked about that. Other representation from Mark may need to be handled with caution and skepticism. Okay. So it may actually be the case that there might have been other misleading things or situations where it's not even telling us what we're supposed to know. So when you pick something like this, You are an audit client. You are an auditor. Your client is in the news regarding potential payment. First thing that should come to your mind is ISA 250. Is there one law or the other that these guys have broken or potentially broken? So first thing, are there laws around this area where they are working? Is there an anti-bribery law? Is there an anti-money laundering law? Is there an industry-specific law? Can I seek a legal advice, get an idea of what could be the potential issue? Then now perform procedures, okay? Check with other clients, check with your colleagues, your professional colleagues, check with parties in that industry whether such payment is allowed, review correspondence, as part of this, they are entering into that location to see whether there's anything anywhere, difficulty they faced, that it was after they make that payment that that difficulty went off, and all those inquiries will be necessary. Now, if you then declare that there's a breach, then how do you deal with that? Okay. So do I have a responsibility to report it to regulator, or is it just management and just charged with governance? Okay. So and then scope limitation, the guy that is saying we should not bother reviewing that area. So that's ISA 210 thing. You raise it with him. And then management integrity or association risk. Do we want to continue to associate with them? Of course, we just got the job, but maybe as well, someone may even be asking, did we do proper client acceptance as part of accepting this job with all the issues they have? But nevertheless, there's hardly a clean client, so it's fine. I hope that is clear. If so, let's move on to another question. You don't have a question for me.
Sorry, Shay. Just can you listen to my last point to see if it's correct? So still under it, I did the management bias again. I said the company's plan to obtain a stock market listing within the next 2 years and will make us to be skeptical of what management could do to achieve that. So the safeguard is to let management know we have to obtain all evidence required for us to form an opinion, as the inability to form one will result in a modified opinion. So we could resign, and then I said we could resign from the audit if the client integrity will affect our relationship and may tarnish our image. Also, we are not able to do if we are not able to do our work.
Yeah, I think I'm fine with that, except for the modified opinion.
Okay.
I don't see anything here yet anything here on this ethical issue that should make us start thinking of a modified opinion yet.
I refer to,
Okay.
like you said, now I refer to the whole of pale. So if you're not able to get, so the mark has said, don't go collecting evidence from them. So if I'm not able to go collect evidence, I'm not able to work. It's restricted my scope of work. So I'm not able to form an opinion on what I don't have. So won't that affect my opinion? Yeah.
Yeah, so it depends on whether you've concluded that that area is significant. I thought we said it's 15,000. So by size, it's definitely insignificant. But if your conclusion is that that's a normal payment or by nature it's not material, then it will still affect your opinion. Okay. But if you conclude that it's
Thank you.
material by nature, then yes, I agree it will be a scope limitation and it will affect your opinion.
Thank you.
All right. So point is try to reflect on materiality before you discuss modified opinion. All right. So let's move to question 3. Question 3. Using the information in Exhibit 1, comment on the matters to be considered and explain the audit evidence you will expect to find during your review of audit working papers on 1st July 2005 in relation to the issues identified. Number 1. Railway operating license and going concern, purchased customer list, and chairman statement. With reference to Exhibit 2, and assuming that no further adjustment will be made to the financial statement in relation to railway operating license or the chairman statement, evaluate the appropriateness of the auditor's report produced by the audit senior. Okay. So let us check the 3 things. Martico is a listed transport company which provides train and bus services for the public on a national basis. The audit for the year ended 1st March 2005 is nearly complete, and you are reviewing audit working paper. Martin is a new audit client for Bet and Co. this year. The previous auditor issued an unmodified opinion on financial statement for the year ended 2004. Revenue is 60 million, prior year 90, so revenue fell. PBT also fell by more than 50%. Total assets fell as well. The audit supervisor has brought the following matters to your attention. Okay, so at this point, I leave it to you. We're taking railway operating license first. Remember, matters to be considered, MARO, and then evidence. So I'll give you time to read that paragraph, and I would also give you time to think about your matters to be considered before we then talk. 10 minutes. All right, guys, so let's talk. What are the matters you will consider? Mary, you can go ahead. You want to talk?
Yes. So revenue is 69.9% of the total revenue for Matco and its material. The pre-tax profit is 106.6% of profit and it's also material. Also, the operating license is in nature is also material to the business to continue. So the issue we are going to consider is the standard says if there is a doubt on the going concern of the business, there should be an assessment of that going concern. So we are going to consider that. And also, we are also going to consider adequate disclosure of the issues around the renewal of the operating license. And then meeting the deadline. I mean, they have little time before the renewal will be done. So they are still having operational issues. So this is also going to be looked at. Whether they'll be able to meet up with the deadline.
All right, thank you. Any other point?
I have Shay. I have for on the railway. I have for risk ongoing concern, and National Railway generated 40.2 million of revenue in 20X, which is 67% of total revenue. And I was saying that there is a risk that the company will not be able to address the recent criticism on its poor service level. So when the tender is being subjected to detailed review prior to it being awarded, it may lose the bid and hence a significant source of revenue will be lost. This will put the going concern in question and the appropriateness of the basis on which the financials was prepared. Stephanie?
So I also want to add something. I want to add
That's
that
good.
the
That's very
okay.
Go ahead.
So I want to add that when you compare the profit before tax of the railway to the total profit before tax of the company is at 1.0, that's about 106%. So once the license has been withdrawn, it would result in a loss for the company in the next year. So it also puts a question on the going concern status of the company.
Okay, that's good. Good point. Yeah, so I think you guys pretty much demystified this one. Okay, that's good. So some key points that I've heard from you are materiality. Okay, so you did it vis-a-vis revenue and also profits, right? Then you talked about the fact that license is tied the going concern status. And so, if conditions not met or 1 month's time review is not favorable, may be withdrawn. Okay? So he said without railway business, company will be loss making. And so adequacy of disclosure of significant doubts related to going concern. So we need to consider whether the disclosures are adequate. We need to consider the fact that without this business, there will be loss making. And not just even loss making, as you said, it constitutes 66% of revenue. So, and did you say this one is 109? 109% of
106.
profit.
107.
Okay, 107. Yeah. But there's, I don't know why everybody focused on going concern only. I agree that that is correct. That's like the main issue in the scenario, right? I agree that's the main issue in the scenario. Or why is it the only focus? So let me share my thoughts with you. If they win the bid, which means there is no going concern issue, right? There is still a need for an impairment review. For this CG, given its current performance. So what I'm saying is one of three things. If you conclude that they will not win the bid, or they actually did not win the bid, so maybe we decide to wait for 1 month, then going concern assumption is not appropriate. So they have to prepare on a breakup basis if the company has to be broken up, okay, which probably will be the case. If it's more likely that we have to sign before the outcome is determined, and we believe it will still win, it will continue as a going concern, but a significant uncertainty still exists, then they will provide disclosures. But providing that disclosure, even though they have used going concern basis does not stop us from discussing impairment. And the third scenario is if everything is resolved, we are fine, we believe they will continue as a going concern, we should still discuss impairment because it is the largest CGU of the business, probably. And perhaps within the railway division, there may still be other CGUs. One destination or one part may be a CGU on its own, another region may be another CGU. Okay? The clear thing is that customers are not satisfied with their service. So they need to assess those assets for impairment. Okay? So we can then discuss all the things. Discuss the issues around impairment test. All right, so evidence. What evidence will you expect to see?
Sorry, I have a question.
Yeah, go ahead.
Yeah, so my question is, looking at the question, they say that oh, sorry, I'm missing it now. Looking at the question, they said discuss comment on the audit matters to be considered. So I'm just wondering, in the question, they didn't ask us for implication on audit report or audit opinion. So I just want to find out when we are discussing it, we should not, when they don't specifically mention that we should discuss on implication on audit opinion or report, we should not put it as matters to be considered, right?
I like your question. Okay. And that's probably because you are looking at the requirements and you are saying normally part of the matters to be considered is the impact on the audit report, right? But
Yes.
now that they have said they have brought out that as a separate section, do I still need to talk about that here? Is that your question?
Didn't put it out in any other place. They just said the question was just comments on the matters to be considered. So, but in the structure answering such answers that I wrote down, materiality, accounting requirement, reporting implication. So I was just wondering because we are leaving that out here. So I'm saying that if they don't specifically mention the that we should comment on the implication on audit opinion or report, we should not go this far. That's my question on this particular one we are looking at.
You should.
Okay.
You should. It's part of the matters to be considered. So I can just say there will be an impact on the audit report. If and the impact of the audit report will depend on the scenario. Okay, so in fact, impact on the audit report. What I was looking at is, there's a B part to this question that talks about a draft audit report. So what I'm not sure of now is all the things I want to say now. I hope they are not already requirements in that B part. That is what I was telling you. Okay. So ideally, if the B part is not here, I will confidently come here and discuss the impact on the audit report. And I would still like to discuss it because there are some things that you guys need to know. It is not straightforward for this question. First thing, if significant uncertainty exists, if significant uncertainty exists about continuance, but auditor conclude the entity is a going concern and an auditor is satisfied with management's disclosures, then what happened? MURGC is used. Otherwise, a qualified opinion may be given. Otherwise, meaning management did not provide a disclosure or you are not satisfied with the disclosure. Okay. Now, obviously, there's another part. If it is likely that license is withdrawn, then breakup basis. Let me not say breakup basis. Let's just say going concern basis is in doubt. If used and auditor disagrees, adverse opinion given. Okay, so those may be impact on the report, yeah? In fact, the impact on the report is diverse. So there's another scenario, which is going concern assumption is appropriate, no more significant uncertainty because the license will be renewed. We still need to discuss the issue of impairment with them. And if they don't recognize an impairment charge, if material, a qualified opinion will be required. But you obviously have to moderate all these things, right? Because if I'm looking at 7 marks and I can state 3 evidence, then just 4 points related to matters is enough. So that may probably be why going into impact on the audit report may not really be necessary. All right, so let's move to evidence. So what evidence will you expect to find?
Can we say management assessment of going concern?
Yeah, that's very, very important. Management assessment of going concern covering 12 months from the end of the reporting period. What else? There's evidence now. We have several people in this class. What's happening? Okay.
Sure. Maybe
Press release.
Okay.
Detailing. Go ahead.
Okay, I wanted to say board minutes showing discussions relating to the progress made in addressing the recent criticisms.
Okay. But I think I'm writing too much. At this level, I should not be writing all these stories. So minutes of board meetings, okay. You should know what you should find in that by now. So he said addressing, discussing what they said they would improve. Correspondence. So when we say correspondence now, it can be between Marty and the licensing authority. Budgets and forecasts, very important. Cash flows of profits to know whether they are still likely to, generate revenue and all those things. Then it's also important that another thing we can get is terms of okay, I think I'll rather say a review of Max's financing contract, confirming there is no breach covenants. This is always important when you are dealing with going concern issues. Okay, always important when you are dealing with going concern issues. Management representation. So management can give you a representation on their intended plan of action, what they intend to do, what stage is the discussion they are having with the authorities, what are they doing to win the license, is what stage is the conversations with them. Then any public opinion posts on post/reaction to the news that they may likely get a renewal or win the tender. So if the public is against it, if they are raising questions, it's an evidence that you need. Obviously, in environments like this, public scrutiny is usually very fundamental. Sorry, if you guys are tired, I'm happy to call it a day. We can round up. But if you want us to continue, let me know.
Let's continue. I beg you.
Let's continue. Let's continue.
Okay. So that place where we have minutes of board meetings that states the intended action, it could also be a management plan or strategy document. So they may have a strategy document for turning around and improving service levels or services that they provide to customers. So that will also be fine in that place. All right, next one, purchased customer list. Go through it and let's discuss the matters.
Shay, can I go?
Yeah.
So the customer list is it's material at 24.3% of total assets. And I'm looking at the useful life of it. It's been assessed by management as indefinite, the useful life as indefinite. And the useful life of an intangible asset with indefinite life should be reviewed regularly for any change. And where it has been, and normally the indefinite life should be annually reviewed for impairment where it has been seen as indefinite. So there is a risk that management will not have been objective in the judgment of determining value in use, as lesser than carrying amount will mean the asset will be impaired. Meanwhile, the loss of clients from the list should have impaired the list.
Okay. Loss of clients should have impaired or is an impairment indicator. Which one?
It's an impairment indicator, sorry, apologies.
Okay, that's fine. What else? How many marks did they put this? Oh, 8 marks. So we need to say more. Wait, if we all agree that the key thing here is the indefinite life, and then she has already mentioned something on impairment. Are we saying we will not be able to bring out the considerations for impairment? So if impairment is the matter to be considered in respect of an asset like this, won't we be able to mention the matters that we need to consider under impairment?
I say. So,
Yeah.
Given that two of the customers list largest clients have moved to a new competitor, and the fact that it's an intangible asset with an indefinite useful life, that means impairment review should be carried out yearly, and so the value of the intangible asset should now be carried at lower of the lower of the carrying value and recoverable amount, which is higher of fair value less cost to sell and value in use. It would appear that the value in use is now $7.2 million. So I think impairment, there has been no, probably in my own view, there should be an upward review in the carrying amount from 6.9 to 7.2.
Sapis, can I add something? So I would like to add that it's the value you use is an estimate, and estimates are highly subjective as they are based. They can be based on management bias. So I would like to say that the value you use might have actually been overstated at 7.2, and seeing that two largest clients have moved to a new competitor as well, I think they have to consider that to the auditors.
Okay. Okay, all right. I see a gap here.
So yeah, I have sorry.
Can
You just want?
Make your mic.
Oh,
Do you have a question or a contribution? Which one?
I have a contribution, and I think that the way that I did this mock, I did this question in particular in a different perspective, because my argument was that treating the useful life of a customer as indefinite is not realistic, because obviously as human being there's a lifespan, and therefore it should have been treated as a finite intangible asset in the first place. And yeah, and that should have been amortized, subject to like maybe like impairment testing. So I think my discussion was, the first thing I considered was the fact that they were treated as indefinite. So I don't know. And then of course I did put some other points, but I'm just going to point that out, and I will wait for your feedback.
Okay. Okay. All right. Let me say some things there. Although this is probably our last class, except for the maybe evening class that we're having throughout this week. Not for AAA or across all papers, the mock debrief. Now, what I want to say is, what did I want to say? Okay. Yeah. So it's not so relevant again because there's no need encouraging you to talk again when this is our last class. Now, to be quite honest, I've had a very stratified class. If I'm in my sleep and someone should ask me, who are the largest contributors in your class? I know them. I know them by name. Maybe sometimes you guys will even observe that I will switch to Teams and switch back again. I just want to know who is talking, even though I've never seen your faces. And then there are people that have been in this class as well that have never contributed anything. But interestingly, they always listen, or at least I hope so. This paper, as you go into the exam all upper Monday, is very slippery. Very, very slippery. But what we have done so far, I mean, if you've been very attentive, you've been following all the things we're saying, is enough to get you through the exams. And to be quite honest, there are some things I'm hearing that are very encouraging. Okay? But the only problem I have is to the extent that those things I'm hearing is limited to the people that are talking, it does not give me a very fair idea of how the entire class is doing. And then when you combine that with a mock submission rate of 11 people, you really can't get a very clear sense of, perhaps the 11 people too will be the same people that have been talking in class. You really can't get a clear evidence of how the entire class has been. But as I've said, if all the things we have been doing, you have been, pulling through, focusing on it, taking note of those things and improving on it, and you do your mock, you are one of the most prepared candidates in the world for this paper. Okay, so I'm very confident you guys will excel. But the reason why I always say talk in class is because it improves the value of what I will give out. So someone just talked about human beings now and that they have a finite life. And I wasn't even thinking that's an issue here, but apparently it's possible to see it that way and not know that IAS 38 is actually talking about a different thing and not what she's talking about, right? Then someone also said, asset value should be upgraded to 7.2, right? I mean, I would not have thought that that could have been a problem. So that's why I said the paper is slippery. You may actually think what you're saying is fine, it's okay, it's well connected and all of that, but one may actually be saying something that is technically faulty, okay? So that's why I've been emphasizing talk. And when you talk, I try to be very honest in my feedback, not trying to couch anything, because the more you get the feedback, the better you improve, right? All right. Now, what I've observed is we are not touching the issues related to impairment. But before I even go to those issues on impairment, let me talk about this useful life thing. Now, IAS 38 talks about finite and indefinite. The very first time I read this thing, that was a paper called 2.5 in maybe 2006, when I was writing my skill level, when I read IAS 38. I also thought indefinite was the same thing as infinite, okay? It was on further reading, in fact, I think it was when I was writing my advanced papers that I now knew that infinite and indefinite, they are two different things based on what the standard wants, okay? They are not saying that it has an infinite life. Hence, probably why you linked it to the fact that the customer has a finite life, okay? And by the way, the customer is not human being. The customer is businesses and private sector and public sector customers. So you can assume they will continue to exist, right? But let's even leave the issue of finite and infinite. It is finite and indefinite. And indefinite means you are unable to estimate for how long you will enjoy economic benefits. It does not mean I will enjoy economic benefits forever. Okay? So it may actually be 10 years, it may be 15 years, it may be 5 years, but you are unable to tell based on current factors, assessment, and all of that, that so number of years is the number of years. Okay? So, and that's usually the case for things like customer list and stuff like that. If you look at the telco sector, they usually have an intangible asset, a cost, the customer acquisition cost. There's a cost, yeah, so customer acquisition cost. So things related to things like SIM card and all those costs related to if they sign a contract with a new company, for example, for all their employees, and stuff like that. I'm talking of very sure. If you check companies like Vodafone, O2, and all those companies, and check their balance sheet, you will see it there. If you read their accounting policy for such intangible assets, some of them estimate what they call average customer life. So some of them will put our average customer life is 15 years. Our average customer life is 20 years, and we amortize these costs over those number of years. Some will not put average customer life. For example, a new telco that is starting and growing might not have enough sufficient data and history to develop customer life. Do you understand? So some of them will then say they assume for now it's indefinite. And that's why I like the point raised by someone who said, when you use indefinite useful life, you have to continually reassess at the end of every year to now know whether it is now finite. Okay? So I hope that side is clear. And yes, it requires significant judgment determining whether it's finite or it's indefinite. Look at the company they bought this from. It's been 15 years, is it 30 years they told us in the scenario? They've been customers for 30 years, right? So that's really long. And as long as those government departments of ours, that our businesses continue, they probably will be customers, okay? Unless Matthew now starts having issues that is making them leave, which is the real reason for the impairment. Now, let's go to impairment. You will notice that I'm not writing again. I'm tired of writing. If I keep writing, we will not finish this question. But just listen, take the key points, and you can always get the examiner's answer. It's June 2021 and all of that. Now, when I'm done, I will ask if you have any questions. Okay? Now, when you, so first thing, basics. An impairment review, and I've said that in this class before, can never lead to an upward valuation of an asset. Okay, so don't ever make the mistake of value you use is higher than current value, so they should revalue the asset upward. No, an impairment review is a test to confirm whether a downward adjustment should be taken. It's never an upward adjustment. Impairment reversal is a reversal. It's not an upward adjustment, okay? You are reversing what a downward adjustment that had happened before because the events that led to the downward adjustment has now reversed, okay? So please don't make that mistake. Now, regarding impairment, Now, this is even quite interesting. The case study we have here is quite interesting. They are talking about customer lists. So what they said we have acquired, they said, some acquire customer list from this, a business which is terminating its operation. Just Coaches hires out coaches and drivers to private and public sector customers. Its customer list includes many highly reputable listed companies and government bodies with a customer relationship and trading history going back more than 30 years. So good. What you have acquired is an intangible asset. Should it have a definite useful life, a finite useful life or an indefinite useful life? Again, as I've said, talk about whether they can estimate for how long they will continue to generate cash flows from this asset. To the extent management is unable to do that, then it is correct to recognize it as indefinite. Okay? But to the extent that they can, then they should estimate the life and put something to it. Okay? It is for an intangible asset like this, it is acceptable, based on judgment and factors that exist, considerations, to say that you don't know how long, okay? Because it's not like you have a fixed term contract with the customers. So we are not talking about now, that's another thing. We are not talking about buying fixed term contracts from another company. Fixed term customer contracts. If they were fixed term customer contracts, then you should know the useful life because the contract has a term. Okay? But what you have bought is customer relationships. Customer relationships. Motolani used to service customer A, customer B, customer C, and has been doing that for 30 years. And now Motolani has sold that relationship to me. So what I'm doing now is managing that relationship going forward. It's not like there's a fixed term or anything like that. So take note of that. Now, regarding impairment, obviously impairment indicator is coming up here because of what? Two customers that have left for competitors. The issue of impairment discussion in AAA often starts with impairment indicators, okay? Often starts with impairment indicators. However, once you say that an asset, and I like the fact that someone mentioned that, once you say that an asset has an indefinite useful life, you have to test for impairment at the end of every reporting period, regardless of whether there's an indicator or not. But once there is an indicator, you then have to test for impairment. But even if there was no indicator, and even if in this question they did not say two customers left, you still have to raise the point of impairment. And now the question is, hope you will remember, because there would have been no trigger that will remind you that you need to talk about impairment. Goodwill, 1. Intangible asset with indefinite useful life, 2. And what's the other one? Intangible asset not yet available for use. Typically, we call that development cost. Those 3 things, you must perform impairment tests on them, regardless of whether there are impairment indicators. So we talk about that. Now, clearly in this question, management has performed an impairment test, and that's why they have value in use. But the question is not whether they've performed it, whether there's an indicator that they've not titled, they've not discussed. The question is, for me, 2 things. Number 1, Does the value in use make sense? Number 2, giving customers exit, the useful life of indefinite, does it still make sense? Those are the 2 things, and I would like to take them one by one. Can you remind me, what did I call the first one and what did I call the second one?
Does the value in use make sense? That's the first one. The second one is giving customer exit. Does the indefinite useful life still make sense?
Very good. So, does value, in fact, let me take the second one first, because that one is a straight assessment. As somebody said already, that once you say an asset, an intangible asset has indefinite useful life, then you must be reviewing at the end of every reporting period to confirm whether it still has indefinite useful life. So management should carry out a review at the end of this period to confirm whether this customer list still has an indefinite useful life. Okay? Because we are now seeing a situation where maybe due to the quality of our service, customers are leaving. And as such, the question is, can we still maintain, can we still say we don't know for how long an average customer will stay? It's just a consideration. We don't know the answer. And management themselves may not even know the answer. But at the end of the day, we need to assess. And that's why we talk about 3 types of misstatements, if you remember: factual, judgmental, and projected. So this is an example of an area where if there's a misstatement, it's judgmental. You can't say it's factual, because you have to just assess judgment used by management. So that's that one. But my focus is on that impairment, value in use. Of course, I'm sure you know that recoverable value is the higher of fair value less cost to sell and value in use. You see, that recoverable value computation in real life, mute your mic, please, if you are not asking a question. That recoverable value computation in real life in real life does not often involve calculating fair value less cost to sale and then value in use separately. Most times, management assumes that the 2 of them approximate each other and they will only calculate one. So either they get a valuer and say, just give me the fair value of this asset and give me an estimated cost to sell, of which the valuer, one of the valuation method they will use is discounted cash flow, which is value in use. So the thing with fair value, you know, when you say fair value, remember IFRS 13. What are the 3 methods that the standard talks about that we can use to calculate fair value? Can you remind us? What are the 3 methods? Valuation techniques.
Readily available prices, observable prices.
No. That is valuation inputs. I'm talking about if you want to do a valuation of an item, if that item is quoted in an active market, then there's no stress. You pick the price in the market, right? But if the item is not available in the market, you have to use a valuation technique. If the inputs in your valuation technique are observable in the market, then that your valuation is a level 2 valuation. If the inputs in your valuation technique are not observable, then that your valuation method is what? Level 3. For example, Risk-free rate is a major input in your discount rate. Is that not true? It is observable in the market. But cash flows, projected cash flows, is not observable in the market. So that's a level 3 input, while the risk-free rate is a level 2 input. Do you understand? I'm not talking about levels now. I'm saying whether level 2 or level 3, that valuation technique that you want to use, there are different methods of fair value, of calculating fair value. There's the cost approach, there's the income approach, and there's the market approach. Okay? Cost approach, income approach, market approach. Now, what am I trying to tell you? Value in use is more like an income approach, because value in use is what are the net cash flows that this asset can generate over its remaining life, discounted to present value. That's an income approach. But that's also a means of getting fair value. Do you understand? Market approach, for example, can be adjusted prices of a similar sale that recently happened. Okay? Or the replacement cost of a similar one. So that's also another fair value approach. So most times, companies just focus on one fair value and they will assume that fair value less cost to sell and value in use approximate each other. So that's their recoverable value. So in this question, you don't necessarily need to now start addressing, okay, how did they get fair value less cost to sell as different from value in use? But if an examiner gives you fair value less cost to sell, for example, if in this question they say fair value less cost to sell is 7 million, while value in use is 7.2, then no problem. You need to consider the basis for arriving at the fair value less cost to sell. Did they use an expert? Is he qualified? Is he experienced? What methodology did he use? Is the methodology acceptable under IFRS? Does the inputs make sense? Those are considerations. But then those considerations too are similar to the considerations you will have for value in use. Although value in use has some additional ones. Now listen. Remember, value in use is what? Discounted cash flow. There's a reason why I'm spending time on this area, because for the examiner to go this length on a question like this, an impairment is always showing up. And you know that in the last 2-3 years, the things that have been featuring on a lot of audits is impairment due to COVID-19, Russian invasion, all the crisis that is happening everywhere. The impairment is always featuring as a major discussion. So you have to be comfortable with it. All right, now, value in use, right? So value in use is discounted cash flows. So first thing is there are two inputs, two big inputs: cash flows, discount rates. Cash flows, discount rates. So let's take the cash flows first, right? Cash flows is coming from management's projection of what they believe that asset can generate in its present condition. I remember there was a past question where the examiner gave a scenario like this, but stated that management has done their value in use based on making some improvements to the assets. You don't do value in use based on making improvements to an asset. It is based on normal condition, current condition of the asset. Normal maintenance that you would do on an asset is okay. You can consider that, but not improvements of the asset. Because the moment you consider improvements to the asset, then you would overstate value in use and the asset will never be impaired. Okay, so number one, the cash flow projection must be based on current condition of the asset. Number two thing I want to tell you is that cash flow projection is also having inputs that we need to review. Inputs. The major input that you need to review, out of several other inputs in cash flow projection, is the revenue growth rate. Because it's revenue that will drive every other figure. For example, for those of you that are doing AFN, we normally calculate something we call free cash flow. That free cash flow is the cash flow we are talking about. The driver of free cash flow before you get your PBT is revenue. Every other thing usually follows, usually a proportion of that revenue. So the moment management overstates revenue, or the growth rate is not realistic, or the forecasts are based on assumptions that don't make sense. For example, you are using growth rates and we cannot see customer contracts that support it, then there's a problem. So the second factor is revenue and its growth rate. Does it make sense?
Yes, it does. Thank
Okay.
you.
No, I'm not done. I'm not. I'm asking a rhetorical question. Okay. So does it make sense? So you have to review that. So that's number 2, right? Or is that number 3? I can't even remember my this thing again. Now, next thing regarding cash flow. Remember I said 2 major things: cash flow, discount rate. First thing on cash flow must be based on current condition of the asset. Okay. Second thing I said is the major inputs, growth rate of revenue, because that drives a lot of things, right? Then another thing will be, okay, so the standard then says something. It says, how do I explain this now? Okay. You know, the longer your cash flow forecast is, the more uncertain those forecasts become, right? So the standard says after year 5, you know, when you are doing a cash flow forecast, there will be year 1, year 2, year 3, year 4. So if your cash flow forecast extends beyond year 5, after year 5, you should assume a declining growth rate unless you can demonstrate otherwise. You should assume what? A declining growth rate after year 5 unless you can demonstrate otherwise. What does it mean to demonstrate otherwise? For example, if I want to assess impairment of an oil and gas asset, for example, if the company can demonstrate to me that, oh, we have been able to discover oil here, the reserves is huge, it's going to take us gradual growth to be able to increase our production from this well and things like that, then I can be comfortable with that as long as the reserves is proven, you know, they are already seeing the production increasing. So that's fine. It's in the ground, it's not disappearing. Or you have customer contracts that will extend for 10 years that you have already signed, then that can demonstrate that you can continue to use a higher growth rate after year 5. But the standard says because of the uncertainties of estimating cash flows into the future, after year 5, assume a lower growth rate unless you can demonstrate otherwise. That's the third thing I want to tell you on cash flow. The fourth thing, and probably the final thing I want to tell you on cash flow, is that the standard also says that cash flow that you are using for your value in use computation, it must be consistent with management's budgets and forecasts that have been approved. So what does it mean? Matrix, for example, is approaching its year end. As organizations approach their year end, they prepare budgets for the next year. Is that not true? And these budgets go through rigorous process up to board approval. If the board has already approved projected revenue, projected cost, projected cash flow balance sheet for a cash generating unit, and you are now, as at the end of the year, doing impairment of that cash generating unit, and you are now assuming cash flows that are different from those thorough process that you have followed in your budgeting process. You know, budgeting is a control itself. So if your cash flow projection for value in use is not consistent with your budget, then there's already internal inconsistency in your organization. So that's why when an auditor is auditing value in use, for example, you will ask for management's approved budgets and forecasts. You want to see whether there's some consistency or they have only just come up with fictitious figures for value in use so that they will not charge any impairment. Okay, so that is very important. And some of these things that I've said can help you with audit procedures, can help you with matters to consider, can help you with audit risk. It depends on which one you are faced with in auditing value in use. Okay. Number 5, still on cash flow, is post-year end. If management has done an assessment at the end of the year, and your final audit is obviously after the end of the year, you would have seen what is happening in the first quarter, depending on how soon your audit is or how late your audit is. You may also be able to compare those post-year end actual figures with the forecasts that were in the value in use computation. So it's more like comparing actuals with forecasts and start seeing whether they make sense or they don't make sense. Okay? All that for cash flow. Now the second one is the discount rate, right? So what does the standard say about your discount rate? Because it's also a matter we need to consider. Let me even be honest with you. A misstatement in the discount rate can even have a higher impact than a misstatement in the cash flows. We all know discounting. You know how the impact of discounting, a small 1% change, can affect your present values. So it's important. That's why sometimes when it becomes complex, an auditor would involve corporate finance specialists to come and review the computation of the discount rate that was used. So the standard says your discount rate should consider the nature and risk of that CGU, of the assets that you are testing for impairment. So if a company, like we solved the question where the company just used its WACC, you may not just use your overall WACC or group WACC. So if Marty now has customer list, has a railway business, has shipping business, and has an overall WACC of 10%, you can't just use that overall WACC as your discount rate because that 10% reflects a diversified business. What the standard wants you to use is a rate that reflects the risk of that business that you want, that asset that you want to test for what? Impairment. So we need to consider whether the discount rate has been risk adjusted. That's number 1 for discount rate. Does it reflect the risk of that asset or CG? Number 2 is what else? Pre-tax. Yeah, so the standard often talks about the fact that the rate should be pre-tax, but to be honest, in practice, that's not often a big issue. If your cash flows are post-tax, then your discount rate too should be post-tax. But if your cash flows are pre-tax, then your discount rate should be pre-tax. So most times the issue of pre-tax is not often cast in stone in practice, right? Yeah, I don't think there's any other pressing thing regarding discount rate. Obviously, yes, the inputs also important. The inputs for your discount rate. So what cost of what risk-free rate have you used? What premium have you applied? You know, is the premium reflective of the risk of the asset? is the discount rate reflective of the duration of the asset and things like that. So reasonableness of the inputs used. And finally, arithmetic accuracy, right? You also want to check arithmetic accuracy of both your cash flows and your discount rate. So I hope all this that I've said, can help you do a proper review of value in use anytime you see value in use, and you know the issues you need to pick out, because they are usually easy marks for anybody who knows these things. The issue of fair value, we've already looked at that today. We carried out procedures on fair valuation on the first question we did. So it's quite the same thing. Fair value is subjective. At the end of the day, it will depend on the method. If the method you are using is discounted cash flow, then everything I've said on value in use will still apply. Okay? All right. Is there any question?
I have a question concerning that discount rate. There was a question I was looking at, and the work of the company was 10%, and then they used a discount rate of 18%. So with what you have said right now, is it always logical that the discount rate used will be higher or below? Which one will be appropriate, or it depends?
Yes, you've answered it. It depends. That question that you are talking about was a question on risk, okay? And the examiner gave 10% as the work of the company, but that they used 18%, okay, as discount rate. Now, in that question, of course, the point was, if the company's work is 10% and you are using 18%, that's a significant difference. We need to be sure that this difference is actually acceptable. So it is not that you must use 10%. As I've said, you should perform a risk adjustment, right? But that process of even doing the risk adjustment can be subjective, right? So, but in that question, the question really was, is 18% then the appropriate rate? And obviously it's quite far from 10% as well, significantly higher than 10%. So, but the answer is it depends. It depends on the risk profile of that asset or CG. It could be higher, it could be lower.
Okay, thank you.
Yeah. In AFM, for example, if you did that, if you're doing it, you would have learned how to adjust for changes in business risk, financial risk, and all those things. So that's really what risk adjustment is about. Any other question? No other question. Okay. All right. So I guess discussing the point here shouldn't be an issue. So given all these things that I've said, if they now say, what evidence will you expect to see? What will you tell the examiner?
Obtain discount rates computation.
Okay, Oga, don't forget, this is evidence. So a copy of or a recalculation of the discount rate used for value in use computation to confirm mathematical accuracy. All right, what next?
Also, a copy
Cash
of the
flow
cash flow projection, budget and cash flow forecast to confirm arithmetical accuracy.
Wait, you've said many things. You've said budget, you've said cash flow forecast, you've said cash flow computation. Which one? Which one? Is it the cash flows used for value in use?
Yes, sir.
Yeah.
So why not just say a copy of the impairment review or impairment assessment performed? Because that impairment assessment will contain value in use computation, carrying amount, do all the comparison. Reviewed. So if you obtain that one, then you need to review the assumptions in order to review the assumptions made and inputs applied. Yes, what else? Okay, so what I wanted to say is to the last person that spoke. Remember I told you that you will need budget. So that was what I was saying. Is it budget? Is it forecast? What are you looking for exactly? Remember I told you that it's nice to get budgets and forecasts that have been approved by management so that you see whether your value and use cash flows are consistent with them. That budget, management approved budget for that area of business is an evidence, is an audit evidence. Is an audit evidence. We need to obtain it. Okay, we need to obtain it. Post-year-end management account. I give you guys these things. You should be able to turn it to evidence. Post-year-end management account for that area of business, for that CG or for that asset, showing the cash flow that it generates, so that you can compare it with the value in use cash flow and see whether it's still reasonable. Customer contracts. Very, very important. Because customer contracts provide a basis for future revenue, right? Copy of customer contracts. In this case, what did we buy? Customer lists. So you need the copy of the agreement, the purchase agreement, or the legal agreement detailing the cost of the customer list that we bought. Obviously, our minutes of board meetings detailing the reason why they acquired it and, approval to acquire and all of that.
Excuse me, sir. Can we also have a copy of the bank statement showing that since we made a purchase, showing the purchase of the 6.9 million for the customer list?
Yes, that's fine as well. All right, so that's it. So that's good. Thank you. I'm going to have to leave the last one to you guys. Or probably we'll take it during our mock debrief on Thursday or Friday. I think AAA is Thursday, is Friday. Anyway, check the group. They've posted it on the group.
It's Friday, sir.
So Friday, okay. So this is the final mock. One of the reasons why I started it now is so that we can review everything. So when we meet on Friday, I will give you feedback on some of the good things that I observed for those who wrote the mock and some of the things I believe needs improvements, and then discuss whatever we have left in this area. Okay. But I do not envisage that we would have a lot of time. Usually I don't like disturbing students in the week towards their exam, but it looks like the only time available for mock debrief is next week evening. So that's why we have that. So probably 1 hour, 30 minutes class. We just quickly go through the good things, the improvement needs, and then any other thing in this diet that I feel I need to highlight. But meanwhile, please keep up your preparation. As I've said, I think you're well prepared, but just ensure that the things that we have been saying, the exam techniques and all those things, you pay attention to it. Take time to reflect before you start writing your answers. read, think, and write. And you will probably observe that that's really what I often do in my class. I give you time to read, I give you time to think, process it, put down your talking points before you start writing. That step of taking a seat back and processing what you have been given helps to ensure you're on the right path and you are not writing something that is out of point or contradicting the scenario. But obviously, time is also not your friend, especially if you are well prepared. You would have a lot of things to write. So that's where mock exams come in. There are two other diets that we have identified for your self-assessed mock. If you have not done it, this week is a good time to create some time for that and do it. I wish you all the best, and hopefully we'll get to see you on Friday again before your exams. Bye-bye.
Sorry, are you going to get a feedback
Thank you,
on the
Bye-bye.
mock? Sorry, are you going to get a feedback on the mock?
Yes, you will. You will. You will. Okay, thank you.
Thank you, Shay. I hope we make you proud.
Thank you.